Okay, thank you for joining me. So, in these next few minutes, I'm going to talk about the Eurusd Forecast, of course. Today is, but also how to trade, and specifically using polarities, which I have learned from Steve Nissen. And so we've got one day left. Yeah, I'm just going to talk about the way I trade polarities. So this is the 1 hour. Each of these scales are on a 1 hour. So if I go to the 15-minute chart, you can see that these sections right here are daily sections. So I can push this to a, if I zoom out, you can tell that these sections are getting smaller and smaller. If I zoom into the H1, we've got it like this thin. So we've got a this thin area. So we're almost in the middle of the day today. And but if I zoom out to the weekly, then these time slices become weekly sections. So not daily. So what you're looking at here are weekly slices, and so far this is what I have been working on, the time scale, and that's to see the history. So for me, it really depends on seeing the history to identify the polarities, and fortunately with MetaTrader, this can be this is also called tape reading. So with MetaTrader, the chart can be stretched out, I think, indefinitely horizontally. So basically, essentially, the tape reading can be stretched out indefinitely. So, so what I do, so with polarities, what I look for is I look for these maximum points that are intersecting with the minimum points somewhere on the line. So that obviously means like a support, a form of resistance becomes a support is using a form of resistance for support, and the same thing with the other way. So it's really the same as like if you want to lay something like a brick on something, and you want it to stay, then you need to lay it on something that's solid, and that's really what this is right here. So if they want the chart to go up more in price, then they lay that initial grounding, that initial point, the reflexive point, or the inversion point, on something solid. So if you can imagine that these are physical surfaces, that's how it's working. So they lay this inversion right here on this market as if it was physical onto a onto a grounding, if you will, which is this part right here of the market. So a former roof becomes a ceiling, just like in a building, multi-story building. And the same thing with the other way, a former floor. See, former roof becomes a floor, former ceiling becomes a floor, and a former floor becomes a ceiling. So it's the same thing with the whole, and it just repeats itself. So, so I do the tape reading, look through the history to find the best, to find consistent or consistently used points like that, inversion points like that. On the weekly, those are stronger points. But obviously, like I'm trying to look at this day to day, and so I need to find I need to find points that that are relevant, on a weekly basis at most, tradable through within a week or on a weekly basis. Also, there's another point of this is the risk reward. So I need to determine, identify those inversion trading points using a risk reward system. So basically a risk zone, type of risk zone, where I say, okay, well, this is the inversion point, and if it's going, I think there's going to be an inversion here, and if it's, and I'll make this, this zone, if it's higher than this part, then I will buy, and if it's lower than that part of the risk zone or the inversion zone, then I'll sell. So what I've found is that those zones, as you can tell, the risk reward, obviously the risk zone has to be a lot smaller than the reward zone, which is this area right here, right? It's just where I make the decision to another risk zone. And so what should show in is that the risk zone lines up with the retracements or the reversals, and that's exactly what I have been having lately. So as you can tell, like I laid this risk zone in advance, laid this one in advance, and this one in advance, and you can tell that it perfectly matched the reversal here, and it perfectly matched the retracement here on this one, and also perfectly matched a retracement that is in the process here. So these are the rules of engagement, if you will, and as the market is moving, then I will also adjust these risk zones, these polarity points, to accommodate more precise, more updated trading, current trading, and and just making better decisions and adapting to the information that's coming in and how I feel about the market. So the feeling is always comes from analysis. So whenever I say something like that, like I'm feeling something that doesn't seem analytical, it actually is coming from the analytical process. So it's always match that. But as for now, I think what I'll show is that this is in the process here, so it's determining does it want to buy or sell. Obviously, I'm not going to sell here, so what I'm going to do is I'm going to take the next risk zone that is very good process. We can see this already going up. So right here, we've got an inversion. A resistance point. We've got a support point here, so I'm just going to test this out. So let's say right here is a first possibility. But let's say for example this. So I'm taking this point, and I want to match it with some other future points. I want to make sure, and then we do have one here and here, also here. So is it relevant? It should be relevant many times. And looking back in the history, looks like it becomes less relevant by this time, which is 1 February, so it's about a few months ago. So that looks pretty good. But if I want to just check this out more, if this is going up, where do I want to stop? And since it ignored this resistance completely, I mean this risk point, maybe I just want to take that off. Maybe I just want to remove it, or at least adjust it. So I think that this is I think I definitely do like this line right here. And so I'll probably adjust this one. looks kind of, I think I would probably put this more down, maybe like right here or something like that. I think I would probably put it like right here. So again, as far as this one, I think that's a pretty good slice right here. Pretty good line up through these resistance points. We've got this. We only have one support point right here, so I could probably put this down into like more like this area or something. Probably more like this is probably, yeah, like this. So so just give a example. Like this range right here is 25 pips, and the risk zone is about 7, so it's about a 1 to 3.5. And if I'm betting on this one, it's probably 1 to 3. So we'll just keep it here for now, and then come back to this and see if it was worth, how good that trade was. So let me put in a buy here, and then we'll put the target right there, and we'll put a stop right here. Right. So we've got this stop and target, and then we'll check this. Later. Okay. And you want to see what that looks like on an hourly, so a little bit closer up, 15 minutes. So here's the reward zone, here's the risk. So you can see that the logic is that we think we have identified a support zone, and also the next support zone or resistance zone, right? So that's really what it is about. So the only thing the market has to do left is go to the next support zone. Is either not break this current support zone and go to the next one. That's what it's doing. So it's going to test this as a resistance zone. This is the two things it's going to do. It's either going to break this resistance and then use it as a support to get to the next one to repeat the process, or it's not going to break it, the resistance will hold, and it will return back to this old support, and it will either break it or it will go back up again. So that's what we're always looking at. And you want to get good enough at knowing which direction, which momentum is going to take, better than, you want to be better at guessing that direction of the momentum than your risk reward against, your risk against the reward ratio for the trade. Once you're at that point, then you are a profitable trader.